You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody. That music can mean only one thing. It is Tuesday. That means it's time for some interviews here on the old Options Insider Radio Network. My name is Mark Longo. I'll be your host, your guide, your maitre d' through this next fun conversation here. Of course, I like to go out throughout the world of options and derivatives and indeed beyond and find interesting folks to pick their brains for the benefit of you, the listener. And next up on the old program is a newcomer to the show and indeed to the network. He is Donnie Roberts, the CEO over there at the Small Exchange. Donnie, welcome to the Options Insider Radio program.
Oh, it's an absolute pleasure to be here, and thanks for having me, Mark.
All right, Donnie, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a little bit of an overview of your background in the financial space, as well as how you found your way to becoming the CEO of the Small Exchange.
Mark, that's been a pretty interesting ride, but one I'm pretty proud to have taken, right? So, graduate school, I took an elective class in options, and I was like, man, I really liked the appeal of them and the capital efficiencies, and I certainly wanted to see what the options world was like. So I moved out to Chicago, got a job as a trade checker and a runner on the floor of the CBOE, eventually became a market maker, fell more in love with the options market and the whole way it functions, right? It was quite a ride learning how to trade on the exchange floor, but even a more interesting ride when I saw the world going electronic. And when I saw that coming and I saw the institution of the raise system on the trading floor, I was like, I think the world is going to change here, and it's going to be in a hurry. So, I got in a conversation with the exchange floor manager of the company I worked for, and I said, look, I think the world's going to change, and I think I want to change with it. He goes, well, be careful what you wish for, because we're thinking of asking you to become one of our representatives. And the company was Interactive Brokers. And I came off the trading floor. I was working for Tim Barhill at the time. Started working for Interactive Brokers, and they taught me the value and the efficiency of the computer and the electronic order routing and execution that the exchanges worldwide were looking to institute. So I worked for them, learned as much as I could. And then I was giving a speech at the CBOE one day, and a guy named Tom Sosnoff and Scott Sheridan were in the audience. And they heard my spiel about electronic order routing, the efficiencies of it, and that it was my feeling that that's the way the world was going to go. Well, little did I know, they were looking to start their own company, and that company eventually became Thinkorswim, and I went to work with them. I was the chief compliance officer, the managing director of operations, the chief operating officer. A whole bunch of stuff. We were a startup, and I know you guys all understand that when you're a startup, you wear many different hats and you learn different parts of the business you didn't even know existed. So I did my very best to learn as much as I could. Well, as time went by, we eventually sold. We had a couple of mergers while we were Thinkorswim and made a couple of deals, etc. But then entered TD Ameritrade, and they ended up buying the whole kit and caboodle. And I stayed on at TD Ameritrade for a couple of different reasons. One, I had always admired the big green machine. I thought that they did a great job of growing their business through acquisition and both in capabilities and accessing and procuring assets. And I wanted to learn what it was like to live inside and exist inside a very large corporate world. And I did, and I enjoyed that very much. I met some great people. They gave me the opportunity to start their futures and Forex business, which I loved because I, quite frankly, love futures and the capital efficiencies and all the benefits of them, and the options market. I guess the derivatives as a whole. And, I did that for a few years, Mark, and then I got, I don't want to say burned out, but I had been going about 150 miles an hour for about 10, 15 years. And I decided it was time to slow down. And I talked with my wife, and she said, sure, I'll support you in anything you do. So I retired for a bit of time. Well, lo and behold, I started meeting my friend Tom Sosnoff, and we started talking about opportunities in the financial industry. And he asked me to take a look at a couple of things and where I saw some opportunities still existed. And I always was enamored by, again, the derivatives industry. And his eyes kind of popped open, and he goes, and then he threw it right back at me, and he goes, how would you like to start an exchange? My eyes got bigger because I had never done that. And I looked at the application and realized there was nothing here that I hadn't done before or any question I have been asked or answered. Went home, talked to my wife. She was pretty happy because, quite frankly, I was starting to bug her. Being around the house all the time. My golf swing was not going to get me on the PGA Tour. So I went back and met with Tom again, and he said, how would you like a chance to change the world? I said, sure. So here we are. I'm the president and CEO of the Small Exchange. We're in business. We've got pretty broad aspirations for the future, but we went through a pretty interesting process to becoming an exchange. And we got into business on June 1st, and we're plugging away at growing our business, Mark.
Yours is a Godfather 3 type story. Just when you thought you were out, Donnie, they pulled you back in.
Yeah. I guess I just couldn't resist the opportunity. I like the action. I like all the planning that goes along with it. I love dealing with customers, and I feel very strongly that we're going to build something special here. I think we got products that everybody can trade, from the very active self-directed retail trader to the retail trader just getting their feet wet, to providing getting market makers to provide liquidity, eventually reaching the prop shops. And then I think our products will be a pretty good long-term investment because of their capital efficiencies and their size and lower cost structure that will attract the advisory space. So I'm pretty excited about what's on the horizon.
Well, let's get into all of that in a little bit. The name is somewhat self-explanatory, the Small Exchange. So you're not slinging large 10,000 multiplier contracts out there for institutional crowds. Clearly more oriented for the smaller, more bite-sized retail crowd. Tell us why you guys decided there was a need, there was an opening for a small futures exchange, and then you kind of hinted at the products. Walk us through what products are available out there right now.
Sure, I can do that. So the idea of the Small Exchange actually started about 18 years ago. Like I said, we were a small startup with Thinkorswim, and I was showing up at work at 5:30 in the morning. And one day, guys from the trade desk and Tom Sosnoff, they asked me, can we offer futures trading? I said, and my eyes lit up, and I said, yeah. I go, it'd be a perfect complement to our options, and it'll create a much stickier customer for us. So lo and behold, we go through the process. We offer futures and options on futures to our customers. And then we started seeing that there were a few chinks in there, right? And I think you hit on one of the bigger pieces, is that the contract size were so big. And the average retail customer, anywhere from $5,000 to $50,000, if they put on a couple of futures contracts or a few options, and something occurred overnight, well, lo and behold, that $15,000 to $20,000 account all of a sudden became $4,000 or $5,000, and they just got ran over. The next part of the puzzle was, look, we had to dedicate a whole group to educate the self-directed customer on how to trade our products, and that meant the different tick sizes, the different multipliers of the contracts, the different expiration cycles. I mean, that was a challenge. I mean, I remember seeing guys in our trade desk with all the futures products that we offered and almost like a grid of all their details and their product specs. And that was decidedly different than the equities and the equity options world, which were pretty much standardized, right? And very much more easily consumable. So we were spending an inordinate amount of resources training and keeping sustainable customers. I mean, some of them got a hold of it, but not a lot of them grasped it. So fast forward many moons, and we were like, well, how could we provide the benefits of futures and options on futures to the self-directed customer? And it just came to us. We were like, make them small, reduce the notional size so the trade values are manageable for any account size out there. Standardize them so the tick sizes are all the same, the expiration cycles exactly the same, so they're easily more consumable. And then make them simple. They're very simple cash-settled indices that everybody can trade. We made them operationally efficient for the clearing firms to be able to facilitate and manage the risk. So small, standard, and simple was our credo, and that's where we're going to stay. We think that that's a pretty darn good niche for us. I mean, will we take the futures world by storm? Maybe not. But we will get enough business out of the futures world, and then we hope to create and drive business toward our asset class away from the equities derivatives world. We really think that our product, the capital efficiencies, et cetera, will really be a benefit to that segment of the market. Look, we won't be for everybody, but we think we will create enough volume, liquidity, and viable product for the investing world that will be a very sustainable exchange.
Well, I like the tagline. I like how you're going so far. Futures that don't look like futures. I think there's a certain resonance, I think, to that for a large swath of the audience out there. But let's say I come to Small Exchange right now, Donnie. I hit the button after listening to this interview and I sign up. What can I trade right now? What's on the docket for me?
So I'd love to have people come as subscription holders because we will provide those people with half-off exchange fees and reduced market data. That's one of the benefits of coming to us is the low-cost fee structure. But right now, out of the gate, we launched with 3 products. One of them is an equity index. It is its own equity index, has its own components and moves that I think is more relative to the retail equity trader. We learned this in the trading pit a long time ago. It's easier to follow a smaller number of stocks and what they do and how they behave than it is to follow 500 of them. We feel that we've got a terrific metals product, which is a indices comprised of gold, silver, and platinum, which gives the equities world customer a more direct exposure to the commodities world as opposed to some of the ETFs out there. And then we've also got an FX index, which is essentially a short basket against the dollar. But we added a couple of currencies like the Mexican peso and the renminbi to give it a little bit more of a global feel than some of the other U.S. dollar indices. We do have a couple of products in the wings that are going through the product approval process. If you've been to our website, you've seen a ticker for a treasury and a ticker for an energy index. Those are going through the approval process, and once that's done, we'll launch those to the public. And again, the exposure, the direct exposure to the commodity, I think will be a tremendous benefit to the active ETF and self-directed trader. And the treasury product is pretty unique because it'll trade in yield and be a little bit more self-explanatory than any other treasury product that you see out there. So we got a couple of interesting ones coming that are, again, in the hands of the authorities. And we've got a few in our back pocket that we're going to roll out when the time is right. And we think that they'll be very relevant trades and very relevant pieces that will resonate with the investing public.
You mentioned your membership model. You're one of the few exchanges out there as a public you can really go in and are offering this new membership type model, which is interesting. Of course, if you go over to a traditional futures exchange like CME, you can go buy a seat and do those types of things, but it's not really an approachable avenue for most of the retail public. Why did you guys decide to go with this membership model, Donnie? What was the impetus behind that?
So one of the big things, so we've always been huge advocates of leveling the playing field. From going back to my days with Interactive Brokers, they always wanted to level the playing field with their trading technology. At Thinkorswim, we wanted to level the playing field with trading technology, education, and growing a sustainable customer to complement that great technology we had. And going into the small exchange, we were like, geez, we feel the individual public customer, self-directed, however you want to look at it, was a little underserved. So we wanted to make them feel part of our market. And I don't know if you had a couple of our other taglines is, we want to become the world's largest customer-centric futures exchange. And we were like, how are we going to do that? How are we going to get the individual public customer involved? Because all the price breaks go to the large firms, large trading firms, market makers, FCMs, et cetera. We go, well, why don't we come up with a deal for the individual customer? So we came up with this subscription offer that people can go to our website and sign up for $100. For your lifetime, you will get reduced exchange fees. You'll get half off of whatever our published rack rate is, and we'll give you reduced market data fees. Look, we know that participation by the retail customer and the individual self-directed customer has been hindered by the cost to participate in the futures market. And that was one of the barriers that we felt that we could control and lower to attract a larger audience, to grow the pie, so to speak.
Only $100. That's a fairly reasonable membership there, Donnie.
It is. And we're pretty proud of it. We think it has resonated with quite a number of people based on our signups. And, that subscription model that we have, Mark, is just going to grow. We're going to have, as a subscriber holder, we'll have a subscriber portal on our website. We'll provide research analysis regarding our markets. And then, as I said, I got a couple of things in my back pocket that will also provide some added benefit to those who become subscription holders to the exchange. These are the people that have gotten us into business, and, that expression, friends and family. If you know me, everybody who's joined our market to this point, they will be treated like friends and family, and I really enjoy and I embrace the individual holder. I think it's great that we've done this for the public.
Well, you mentioned you guys have only been really up and running since June 1st, so kind of a short window here of operations. But what's the early response been like to this membership model? You've been seeing people flocking to the exchange. And also, as on a related point, you went live June 1st. It doesn't take a genius to realize that the markets in the world are a little bit different now in June than they were, let's say, back in January. So what's it been like for you guys and the team as well, launching an entirely new exchange, an entirely new venue in the midst of a global pandemic, Donnie? Yeah,
that took a little, I don't want to use a politically, and it took some chutzpah to do this. There's no doubt in my mind. But we were able to pull this off. We wanted to launch a little bit earlier, but the COVID-19 thing kind of took things over. And look, Mark, my job is first to do no harm, to use a much overused term. I had spoken to our clearing FCMs, and I had spoken to our DCO, which was the OCC, which was great in organizing my meetings and discussions. And we decided that, look, everybody's operating in a business continuity and disaster recovery posture, and we decided that we would hold off on the exchange. About a month went by or so, and had those same rounds of conversations. And we all decided, look, the financial industry, especially the clearing and settlement and the processing, had been functioning very well. The risk monitoring of the market had also been functioning very well. So we decided, okay, we'll go June 1st. Old friend of mine said, when is a good time to launch an exchange? And we started laughing and go, well, nobody's done it in a long time, so this might as well be the good time to do it. And so we set on the date of June 1st. The response to the subscription offer has been tremendous. It is what's driving us and creating a sense of belonging for them and to us because of that response. And the sign-up process is pretty smooth and elegant and very easy to manage your way through. Those customers and subscription holders are slowly but surely laddering into the market and trading our markets. Our market makers have been a great job of increasing our liquidity profile. So I guess the pieces are coming together, Mark, and to use an old options term, the delta's going up.
Well, the other challenge, in addition for you guys out there of attracting new users and customers to the products, is when you're launching a new venue, a new exchange, is getting the liquidity pool up and running. And as I mentioned, these are not exactly optimal times for anything right now, let alone getting out there and generating liquidity and tight markets for brand new products. What's that hurdle been like, and how is the liquidity here in the first month and change?
So a couple of our initial investors in the exchange was Jump Trading and Citadel Security. So we always knew we had some solid anchor market makers. But then a nice company called Boudreaux Trading and Core Trading came in to also make markets with us. So I got to admit that first week, I was looking at the liquidity profile and I was like, this has got to get better. But I knew it would. These guys, because the uniqueness of the products, they needed to know how they would behave in a live trading market. And after that first week, Mark, the liquidity profile has just been increasing in both depth and tightness. And it is, I don't want to say this because some of them might hear it, but it's exceeding my expectations right now, which is great because I have pretty lofty expectations. So it's there. It's getting better. The beauty about us getting into business, a lot of the people that we were speaking to previously that were wait-and-see people, well, they see that we've gotten into business. They see that we've launched our products. They know that we're going to launch additional products. So they're knocking on our door now, too. So it's kind of gratifying that we're here, that everything is improving. Believe me, Mark, we're a long way from what I would call successful, but we're on the right path.
You alluded to it earlier that, futures have a little bit of a challenging obstacle for retail because so many of them, if they're interested in a commodity or whatever it is they want to trade, a lot of them get lured down the golden road there of ETFs. They see headlines about crude oil, let's say, a few months ago, and everything went negative. They dive into, let's say, a USO or an XLE, the same thing with an ag or whatever other product they want to approximate. ETFs tend to be the path of least resistance for a lot of retail out there. So even large venues like CME have struggled against this for years to try to talk about some of the things you're talking about here, the capital efficiency, liquidity, size, whatever it is, of the benefits out there of trading futures. versus ETFs, but it still is an uphill battle. Is this something you guys are prepared to wage here on the education front, trying to get out there and really get in the trenches with retail to explain to them why they should choose a small futures contract versus that oh-so-sexy ETF there, Donnie?
Yeah. I agree with everything you said, Mark. It is a challenge, an uphill battle, but we're prepared for it. One, to me, the equities world has become very expensive to trade. For example, you trade 100 shares of a $50 stock. Well, that's great, but that's $2,500 in Reg T margin you're going to put up, or you're going to put up $5,000 in cash. Based on our product size, you'll get the same bang for your buck for about $1,000 or $1,100. The other benefits of trading our product is that direct exposure. There's a rebalance once a year, but that ETF that trades, it goes through a little bit of a rebalancing, and the people that traded some of the oil ETFs found that the hard way. People talk about zero commissions for some of the ETFs. Well, look, guys, nothing's for free. The ETF, the commission may be zero. However, if you're trading Reg T, look, I lived in the equity options world and the equities world for a very long time. They had a bunch of bean counters going through. Well, where can we charge $2 more here, or 2 percentage points here for Reg T margin and debit margin requirements? So, again, nothing's for free. Payment for order flow exists. I get it, but there are some challenges to the ETFs in the equities world. Now, when it comes to our product, again, the capital efficiencies are much better. The tick size of $1 is much better than a penny. No debit interest charges. No day trading rules. If you want to short the market, there's no short sale locate that you have to perform. Look, we've all done this when shorting the equities market. Sure, you do a short sale locate. You get to have that position for a day, maybe two if you're lucky. And then when that locate can no longer be performed, or you can no longer secure that stock, well, you're told to buy that in. Well, that doesn't happen with the futures world. So there's certain advantages to trade our product, especially for the active trader, that we think will truly resonate once people realize what our products can bring to their trading world and their investing world. Now, as far as education goes, we have created a myriad of content regarding our products, and you'll see postings and videos put to our website. You'll see a YouTube channel that we've created to educate people regarding our products. We sponsor a show on the Tasty Trade Network. It's called Small Stakes, which we thought was fun. That will also educate people regarding our products. We realize the importance of education, Mark, and we're willing to give, well, right now we had planned out roadshow seminars, but we're perfectly willing to do an online seminar to individual trading groups, social trading environments. We're perfectly willing to do that. People have the interest, we've got the time, and we'll make it for them.
I'm definitely with you on the capital efficiency. And I was an early proponent of One Chicago. I thought what they were offering out there made sense for a lot of our audience in particular, people out there on the bleeding edge of the active retail spectrum who are tying up tons of money in capital, buying expensive stocks like Apple and Amazon. I think the single stock future made a lot of sense for a lot of the reasons you're describing there, not the least of which capital efficiency, being able to short it whenever you want. They had a lot of benefits, and yet that product and that exchange never really caught fire with the masses. One of the reasons, of course, was that brokers really didn't have an incentive to undercut their margin business. That's a big business for them. So we've seen a lot of interesting products like this in the past. Many of them haven't really resonated. Did you guys really pay attention to that One Chicago model? Did you guys learn any lessons from that you're hoping not to replicate here with the small exchange here, Donnie?
Yeah, so Mark, people always take a look at what drove people's successes, and that's great. But in retrospect, it's not to repeat others' mistakes. right? So the one in Chicago, great exchange, great idea for a product, etc. But the product was pretty darn big, right? And a lot of people couldn't participate in that. The other part of the equation is that exchange ended up in regulatory no man's land between the CFTC and the SEC. So it was very difficult for them to get things done in an expedient fashion because they were caught between the SEC and the CFTC. I mean, they had great technology, they had great leadership, they had great product, but just couldn't seem to get traction for various reasons. Now, we looked at a lot of the things that they did, right? History is a great teacher. And we knew that they had great technology, so of course we looked at every exchange out there to see, order types, how they handled different instances, their rule books, et cetera, et cetera. And we kind of learned a lesson from there. We learned to reduce the size of the product. We learned to standardize it. And we learned to kind of take it a step further in the mass marketing. Look, we learned a lot of lessons through Thinkorswim and TD Ameritrade and the various other firms that people came to join our merry band from. So those are the types of things we learned, Mark.
And you're not concerned about, because brokers at the end of the day are often the kind of bleeding edge, tip of the spear evangelists for a new product. If they get behind it, if they really promote it out there to their audience and to their members, people will get behind it. If they maybe bury it on the fifth page of a submenu, it's a little bit harder to access. You guys aren't worried about that obstacle there, Donnie?
Yes, of course. Always worried about that, but we also know in this day and age of social and digital marketing, we can take a lot of responsibility and create a lot of that greater awareness for ourselves, and to hopefully drive their customer interest. It's a chicken and egg thing, right? So if we can drive that customer interest to speak with their brokerage firms to offer our products, then the brokerage firm will have to speak to their clearing firm to become a participant in our market. And we think it's a pretty good pathway, right? We know if you can get the individual public customer, especially the active self-directed customer, the market maker will come. And if the market maker will provide that liquidity, the prop shop and hedge fund will be there because they can execute their trades. And look, we feel our products give them a pretty cost-efficient alternative to some of the hedging vehicles that they use out there. And again, because of the capital efficiencies and the size of our product, we definitely want to appeal to the advisory space and the self-directed advisor to enhance people's portfolios. Look, people can use our product to hedge a portion of their portfolio. The products will move enough to provide some short-term asset speculation opportunity. And then again, the long-term investment, although a little further down out on the horizon, we think it'll be an excellent vehicle for that as well.
Well, Donnie, I have to say there is one data point in your favor very recently, which I'm sure you guys have been watching ever so closely. That is, of course, the launch of the micro futures products over there at CME. They launched a little over a year ago. And a lot of people, including myself, thought maybe they were interesting, but didn't expect them to set the world on fire. I don't think CME did either, because they've turned out to be quite literally the most successful product in the history of their exchange, doing a ridiculous amount of volume out there. So clearly, Donnie, there is a demand for a small, indeed a bite-size type contract. This must get you guys excited, a little bit of a validation of your quote-unquote small business model, Donnie.
100%. So when we started the small exchange, I was hitting the different futures events to garner interest in the exchange. And look, it was no secret we were starting an exchange because we actually approached them about clearing our exchange. And I got to Boca, and this nice young man comes up and he goes, "Hey, Donnie, did you see that press release today?" And I looked at him and smiled, and I said, "That was awesome. Can I write your next one? You just validated the whole premise for the small exchange." And he looked at me like, oh yeah, that makes sense for you. I was like, yep. I mean, we still had a long road to go to get through the regulatory environment at the time, but you're right. It did validate what we're bringing to the table. Their success will help breed our success, And quite frankly, to create good, sustainable liquid markets out there, you need a collateral trade for the market makers and people to lay off and hedge, etc. We think that our exchange will be very complementary to the rest of the exchange world because of what we bring to the table, the type of trader that will create, nurture, and educate. And the collateral trade will be very beneficial for all the exchanges. So I guess I'm looking at us as a very complementary piece to the financial industry.
Well, Donnie, that music means we've come to the end of our little sojourn here on the old Options Insider radio program. I want to thank you for coming out here and joining us here in the midst of all this madness and the pandemic, just a month after the launch of your exchange. A lot of people have been hitting us up saying, hey, bring on the small exchange guys, so I'm glad we were able to do that. But before we go, you kind of touched on it on the top of the show, but we like to leave our audience a little bit of a hint, a little bit of a tease of what they can look forward to coming down the pike. So, Donnie, now is the time. The floor is yours. What can folks look forward to from the small exchange in the coming months, sir?
Well, you're going to see some very relevant products coming out of the small exchange in both the sectors world and some very interesting ag products that nobody's put out there yet. And, options are in our DNA, and we will be launching options on our products very soon. It won't be tomorrow, but we will be launching options on our products because that is definitely in our DNA, and we'll be very proud to hit that next hurdle in our exchange development.
Oh, I like that. That's music to my ears and indeed to the ears of a lot of our listeners. Well, you guys know where to find them. Just type small exchange into your browser of choice, and you could find all this interesting stuff we've been talking about here, the membership model, the contract specs, what they have coming down the pike, and a lot more. And Donnie, we'll look forward to all this coming down the pike, not the least of which being the options with great interest in the coming months, sir.
Yes, Mark, thanks for having me. I'll be back anytime. I enjoyed it. Thank you very much for today.
Well, thanks for joining us, and thank you out there for joining us as well. You guys like our interviews? Well, we got a double feature for you, so stay tuned. It is Interview Tuesday, after all. If you're listening live, we'll be back a little over an hour, about an hour and 20 minutes with another great guest. Otherwise, if you're listening after the fact, just hit next, and we'll be back with another episode of Options Insider Radio.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.